Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Monday, and today was definitely a little bit of a volatile day. We came in, futures were up, market gave a push. You had strength in the banks, you had a high beta tech acting decently well. You had some pressure on some key names, maybe from that Barron's article, maybe from other forces. But either way, we came in today, and the spiders were on day 4. I talk about my strategy, which sometimes leaves a lot of money on the table, but sometimes is prudent. I talk about trying to buy day 1 as a feeler, adding on day 2 for confirmation of the day 1. Maybe if day 2 is really strong, selling some, taking some profits. And then typically on day 3, I get pretty light, and then I figure out what's next. On day 4, if things are strong and they continue, I'm typically crying. But on day 4, you always want to be a little careful. If you buy wrong and chase, it's hard to hold on a potential pullback. And today, you're going to look at the overall indices. If you don't trade all day, and you're going to see, oh, Nasdaq was weak, Dow was up. Probably not a normal day, which it could be. Today could be a normal day, but it could be one of those days to take notice that you have to measure your time frame. If you are an active trader or an intermediate trader or someone who trades for alpha and cash flow and is trying to generate money day to day, today was probably a day to take some positions that you have had or you've been trailing or you've been hanging on to in a portfolio approach. And if you're not committed to them, say, you know what, I'm going to clean them up. I want to see if today leads to more weakness or if today leads to nothing. So you get rid of some positions you don't like or you're not in love with that aren't part of your core situation. Also, on a day 4, you sell into some strength. I don't care where you own it from. Midday, I sent out a tweet about the banks. I'm like, if you've been in the banks for the last week, not a bad spot to trim and trail. If you bought like Bank of America at 14.30, sell some over 15. If you bought Citigroup on Thursday, sell some after 3 days. Goes for anything that you bought. And with that being said, if you always take trades, yes, sometimes you leave money on the table, but sometimes you stay safe. So let's just run through some of the charts and see where things stand. You look here at the spiders. Okay, you will see that here was your last corrective activity, right? Just say this was the last prior high. This is when you had that breakout failure, led to a decline, and then here was your reversal. From here, very nice new trend, okay? Talk about this starting from just say October 9th. So if you're a guy who trades intermediate trends and said, okay, I'm going to look for a new one here after this corrective activity, same way you potentially looked for a new one here after this head and shoulders top on that low, this is what you had to navigate. So your red dark reversal, your engulfing bar, your commitment, you take out the prior highs, never came back below like here. And then here is when it sort of looked a little wishy-washy and then got engulfed. Here was your day to get back along some swings as it digested the top end of this Friday jobs report day. Here was your breakout, confirmation to maybe add or maybe here. And then Friday was your day to maybe take some off or even today. So today, not the end of the world. Think about where we are. We're not even retesting the 8-day yet. That's why I'm saying if you are an active trader, you could have sold some of your positions when we recrossed back below the prior high of 1798, saved yourself a little bit of money, and maybe you could even be cute and buy back if we test the 8-day or if we retest the prior breakout. That's what I'm going to be looking to see what happens the next day or so. We'll see what happens, obviously, tonight. It depends on how we open. If we open flat tomorrow and trade below today's low, maybe we continue. If we open down, maybe if you're net short overnight, I am a little net short overnight, I will say it. I've only been net short a few different times, and tonight's one of them. Maybe you get a move down to here or maybe even to here. But either way, if you're an active trader with the way some of these high beta names closed, you hopefully lightened up a little bit, and then you figure out your commitment level. With that said, one stock that never found a friend was Facebook. Facebook, I came in here, said, this is your pivot, guys. Here it is, 48. If Barron's has any power, okay, or doesn't have power, or here is your 48. 48, we were above it for, I don't know, maybe 5 to 15 minutes, and that was your stop. If you were long, saying, okay, it's digesting pretty well. So if you look right here before that, okay, it looks kind of good up against this downtrend since the highs. Might break it, might not. Here's your level. If you were long, you could always lose less. So if you fought it and bought the whole way down, now you have a lot of decisions to make. Because now you're going to have the bears out there saying, here we go, we're complete now. We have the left shoulder, the head, the right shoulder, close on the dead lows. People are probably going home net short. So with that said, that was a problem. That was a source of weakness throughout the course of the day. Another source of weakness was Apple. Apple, I came in long, and my stop was right here. Okay, this is what I spoke about pre-market. I said somewhere around this low, actually not even that low. Really it was like 523.50. If you were on my VTF, you saw I got stopped out there. That was my stop. I was playing for a breakout potentially above this descending trend line. It looked good. Friday became vulnerable. Today I got out. And now I'll see whether or not it comes back in and hangs around, or if it starts to deteriorate. As of right now, if you're in Apple, though, just say you're in it. You could be in it from a long way below. Just say you're in it from here, the break above this downtrend right there. This means pretty much nothing to you unless you're really tight. If you're in it from here, still means nothing to you. But if you're actively trading it, which I am, and I could do it, this was my out. Yes, if there's some kind of news about iPad sales or a buyback and it gaps up, I'll have to figure it out. But for now, this was my out, and now I got to figure out what happens next year. The next stock we were focusing on was Google. In my opinion, I was looking for a trade, a breakout trade like this, above 1,041. So with that being said, okay, early in the day, it did break above that 1,041, okay, went as high as 1,048, and then closed back below at 1,032. You look closely at this pattern right here, and this right now, to me, is a breakout failure. In healthy markets, you have breakouts that hold. This one did not. So for me, I sold it into some strength, and I had a high-level stop because I've been in this thing since this day, and it still looks fine. If you were in it from earnings, or you're in it from maybe here, and you say, okay, I'm going to stick around because market's not going to really care. It's going to digest a few days. We'll probably maybe test the 8-day, and then from there we can go. Okay, that's fine. You have that prerogative. For me, I was looking for momentum, and the momentum came and left, so I leave. That's what I do. So with that being said, close on the lows. Now we'll use today's low as a pivot. So maybe it goes below it, puts in a tail. Maybe that gets me back in. But as of right now, the reason why I was trading this was it was pent up looking to break out. It breakout happened, and it couldn't hold. So my thesis was changed. So now I will wait, and I will see. As far as just say a Netflix, it also gapped up and traded through and went negative pretty quick. And again, it doesn't look horrible based on where this trend line is, but you know what? A red day like this, if you're trading for alpha and P&L and you're long it now, yeah, you're in mercy of the stock. If you sold some strength after 1, 2 on the third day, now you get to see if the 8-day holds or this trend line, and you also have the lower pivot of 339 as your new point to trade around. You look at Tesla. Tesla, I did not trade it once today. Granted, it's not something to be proud of because you could have been short here, and I was short this on Friday, and I didn't hold it overnight, but you didn't have to be. So here's the thing on Tesla. Tesla had a great trend for a long time, and trends in momentum stocks are as great as long as they last. This was your first shot across the bow when the markets made a new high, and it failed here. Next thing was earnings. I do not take stock into earnings. I take options. Okay, I think I even bought the options. They were worthless, big deal. Lost the premium paid. Then we talked about the 100-day, which it failed to hold. So if you were in it still, you said, okay, I'm going to get out here. Then came in, markets had a record week last week, right? Record week, big move. It did not rally, relative weakness. Look at the move lower. So with that being said, now from the high here of 194 down to 121, it's interesting for maybe for a trade, especially if you sold into strength or you didn't take it into earnings and you've been just actively trading it. We'll see how we handle tomorrow, if it maybe gaps down or if it opens up, trades through today's low of 119.61 and comes up. But if you look at it, you have the 200-day still well below. 200 days, I think 107. Let's put that in there. I checked it during the day. 200-day. So obviously everyone's talking how it has to hit that now. So usually if everyone says it has to hit there, it doesn't. As of right now, all we know is it's still a weak stock. No reason to be stepping in front of a falling knife. You don't know how far it goes. Same way you didn't know how far it was going to go to the upside. So with that being said, now it is getting worthy of a look. This is going to be on my A plan tomorrow to see if I see relative strength, if I can get an active trade, because I haven't really been in it. I missed a short side, big deal. I'm not a great short, but we'll see what happens tomorrow, and we'll see what type of market we have tomorrow. But ultimately, this trend was great until it changed right there, and then you even had your bounce back, and if you could have been salvaged in front of earnings, and that was that, especially as an active trader. Let's see what Amazon did today. Amazon, not as bad. Amazon, you had that big engulfing day here after this first day one. Now it seems like it's trying to hold higher, so not as bad. The banks, we talked about the strength. I think it was, what, a week ago, Jobs Friday, when the XLF engulfed the lower range. That was your entry. Last week, you had some time in place to buy more. And then today into the strength. Why not sell it on day 3 or day 4? Some. If you want to stay with some and you're not active, that's fine. But if you're trading for alpha or cash flow, why not sell some? So XLF, you look right here, this was when it woke up, which we talked about. Here was your engulfing day. Even if you missed that, you had that chance on Wednesday. And then this was maybe your ad as it took out this 2090. And why not sell some up here at 2127? So now at this point, I think you could get a retest coming into this breakout. And if you sold 2125s, maybe you could buy back 21s. Same things go Bank of America. It had a great move, right? From this engulfing day that Friday to holding higher. So maybe you bought day one or you added in here and that was your cash flow trade. 1, 2, 3 on the 4th day. You buy, if you were chasing over 15, even though it probably or could go higher in the coming months, now you have to figure out whether you get a retest of 1460, which still would be fully fine in the overall scheme of the stock. So that's why entries and exits matter. It pushed through, squeezed, closed right here. So now we'll see if we get some kind of corrective activity. Hopefully we do. And the 8-day can move up. Maybe we have now support 1, support 2, or maybe it even retests this breakout. Look where it came from. So we shall see. Same thing goes for even a Citigroup. Citigroup has been lagging. This was my entry. This was my ad. And then I sold some into this area as it failed. So now let it digest a little bit here, and then I'll be buying back most likely if it trades above 5140 and the market catches its breath. If you don't trade actively and you bought here, this really doesn't matter to you. This might matter to you if it breaks 50, but we shall see. That's a long time away. The 3D printing stocks have been in fuego. In fuego. I think finally the momentum guys caught this little topping trade. I'm sorry, oops, whatever what that was. Here was your last breakout. Here it extended. Still didn't close quite red, but at this point, it's definitely extended from the more core buyable areas. Been a great group. Let's see what happens there. If it hangs in there, falls apart. Some guys were looking at SSYS today too. Squeezed up, closed off the highs, and now it's going to need some time. It's not as tight. We love tight patterns. This was very tight right here. Broke out. Still looks okay, unless you chased it up there. Now you're a little bit worried. So now you need to see, how does it digest this potential breakout failure. Let's see where else. Elsewhere. Target. Target I just sold because I was bored with it, but it still looks okay. Still hanging around, still above the 8-day. If it starts to move a little bit better, I'll get back involved. I cleaned up a lot of stocks today. I said, you know what? It's been a nice move. The Thursday before Jobs Friday, I was net short and then switched some gears, got back to being long last Friday, traded, held things for the majority of the week. I think I came in today with 7 to 9 longs and 1 short, and then I left today net short. And then tomorrow I'll see what holds in there. Maybe I'll start putting some trades back on. But now I'm in a position to being net short. We open up tomorrow, 5, 6 handles, and we all of a sudden start engulfing today's down move, and we close back above 1798. I'll say, okay, it was wrong, and I'll figure out how I could re-enter and continue to make cash flow. Talked about how the majority or the big money, in my opinion, has been made this year. Now is the time to preserve some capital, preserve what you've made, but you can't sit there and do nothing and figure out and get a paycheck. If you're a trader, you have to figure out how to maneuver, where the best patterns are, the tightest patterns on how to put on entries, how to take some off, how to stay safe, maybe look for some shorts, but not overstay your welcome if it's not a spot to be there for too long of a time period. And we're going into November, and there's about 6 weeks left. Not the time to make your entire year. It's a time to preserve your year, make some cash flow, and continue to see and continue to let the market prove that it could sustain these upper levels, because, again, we've been up a heck of a lot this year, and we don't need to be up another 2 to 4%. I think even fund managers would rather us pull off 2 to 4% so they don't look so bad, because I'm sure their percentage gains for the year aren't as the same as a buy-only mutual fund, but whatever. With all that said, day to take notice, a day to measure your time frame, a day to clean up some loose longs, and now we'll figure out what the next few days bring us in a spot where we can embrace some volatility if there is, and figure out where the relative strength goes or the relative weakness, and just be involved. Have a great night. See you in the morning.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.